All right. Welcome everyone to another space. We're still waiting for one more speaker, but he notified me to be a bit later. So let's get it underway. Welcome everyone to this weekly Twitter space where we discuss the hottest topics in Web3 from a research-based perspective. Today we'll be talking about the SEC lawsuits against Binance and Coinbase, and more specifically the impact it has had on the markets. So before we get started, I'll introduce MetricsDAO, myself, and then my guest. So the host of our space is MetricsDAO. MetricsDAO is a community of Web3 data analysts where you can learn, earn, and connect. So be sure to follow them if you want to find out more. Now, these spaces are organized and moderated by me, Helix, and I focus on bringing out useful insights drawn from data and research. By working with top analysts, researchers, and experts, we decipher numbers and stories to help you arrive at measured takes on matters. So, if you value well founded perspectives and are keen on taking a data driven approach, be sure to follow me. With these spaces and more, we're bringing clarity to complexity, one conversation at a time. So, now to our speakers. We got Lena from 21 Shares, Clara from Kaiko Data, D or Effort from Blockworks Research. Then we got Joanna and Adam from DeFi Llama News Info. Adam, glad to see you made it as well. Thank you for being here, sir. And finally, we got Jimmy Van Straten from Crypto Slate. Welcome, guys. Please tell me a bit more, or tell the audience a bit more, actually, about yourself, your work, and specifically what you've investigated on today's topic. Lena, maybe you want to take it away.
Pleasure. Thank you so much for having me, guys. I hope you guys can hear me well. My name is Lena Deeb. I've been working with 21 Shares since June 2021. Before that, I used to be a business reporter based in Cairo, reporting on startups and entrepreneurship and tech in the Middle East. Specifically about this, the topic of this Twitter space, I usually co-author a newsletter, a weekly newsletter published on 21 Shares. And we have a special report on the Binance and SEC lawsuit. So we're pretty in the mud in this case. We also have a June Analytics dashboard spearheaded by Tom Wan. He's here listening. Make sure to follow him. I'm pretty sure everyone here follows him. Yeah, that's pretty much it.
Awesome. Thank you for that introduction, Lena. I really enjoy your weekly newsletter. Been following it for a while now. Awesome.
Thank
Thank you
you.
for that.
Thank you.
Yeah, for
I'm glad to know
sure.
you're reading.
Definitely. Um, all right. Who wants to go next?
I can go. Um,
Sure, please do.
Hi, thank you for having me. I'm really happy to be on this knowledgeable panel. Adam and I are from DL News. We are funded by, but very emphatically independent from DeFi Llama. And we cover the crypto and DeFi markets. I came out of TradFi. I think Adam did as well, but I'll let him tell you a bit more about himself. And as journalists, we are just following the Coinbase and Binance lawsuits, as you might expect. So I feel a little bit of imposter syndrome being around all this data talent today, but that's where I'm coming from.
Okay.
We appreciate all research-based perspectives, Joanna. So it's all good.
I can
Adam,
jump in there,
go
and
ahead.
yeah, just to kind of piggyback on what Joanna said, work at DL News. Sort of a TradFi background. Yeah, I started off with Business Insider a few years ago, and then spent a little over a year at the block covering markets and companies. Been with DL News for the last, I guess I'm coming up on my first month now, so it's a fun time to start covering news with the start at DL News, just as everything kicked off the SEC. So that's kind of where I'm coming at it from.
Love it. Always good to have some experienced folks from TradFi now in in our blockchain space to share their takes. Any other analysts? James, D, Clara?
Yeah, hi. Thanks for having me on. Yeah, I used to work for a hedge fund, Seidler and Co. More coming from the macro perspective. So then came to Crypto Slate to understand it more from the crypto perspective. And yeah, just looking at it from an on-chain perspective, from a trading perspective. So it's really interesting to see what's actually going on at the moment.
Yeah, for sure. Thank you for that. There's definitely a lot going on, that's for sure. D or Clara, care to introduce yourselves?
Yep, I can go. Hi, everybody. My name is Clara. I'm the Director of Research at Kaiko. Kaiko is a crypto market data provider. So we specialize in centralized exchange market structure. We also do some DeFi analysis. So, of course, the Binance US and Coinbase lawsuits have been sort of top of book for everything we've been looking at this week. We noticed that there was an 80% drop in liquidity on Binance US in the hours immediately following the lawsuit. And so that's been sort of the big thing that we're looking at today. And now, of course, more recently, the CRB and then Tether depegging.
Yeah, I'll jump in here. Thanks for having me and everyone else here. My name's D. I've been in the crypto space for about 6 years now. Currently work at Blockworks Research, predominantly focusing on the Cosmos ecosystem, but really just following all market happenings. Prior to working at Blockworks, I was working for 2 years at a crypto hedge fund in DC as like a lead analyst and also trader. And yeah, I'm excited to talk about the current market situation and I think where we all expect the market to go from here.
Yeah, definitely. That is definitely today's angle. Let's call it that. Clara already mentioned the DPEG from Tether. I wasn't aware that it's so directly related to that, but I guess we'll come to that. Let's start at the start though, and I'm looking to our reporters. Maybe they're the best position to start this out with. Let's call it like a little summary of the events of the last 2 weeks or weeks and a half. How did this all start, and what's been happening since last Monday?
Yeah, sure. So I think it's clear that you asked me before, is Binance in trouble? I think, yes, it's obviously in deep trouble. There's the SEC complaint from last week. It already had one pending. It already had a pending lawsuit from the CFTC, and we're momentarily expecting an indictment from the DOJ. The SEC and CFTC suits are civil, while the DOJ's will be criminal, and that will probably relate to the fact that Binance allegedly facilitated billions of dollars worth of money laundering. So the SEC is obviously is probably what we'll focus on today, and the allegations there are pretty damning. I was surprised to see a lot of defense of Binance on Twitter, because I was thinking if I was a customer of Binance, I would be pissed. This is not just, I think there's, you see these kind of highfalutin phrases like registering as a broker dealer, and you think, oh, that just kind of sounds like something that would annoy Gary Gensler. Like it's nothing to do with me. But what they were really doing was lying to investors, customers, denying the protections and transparency that users of the platform are kind of entitled to as people who live in a country with very strong securities regulation. Leaving aside the fact that they weren't even supposed to be marketing to these people necessarily. So some of these allegations, I don't want to go into it too long and take up too much airtime, but because there's obviously a lot. But just to pick up two of my favorite in inverted commas, they engaged in wash trading using a subsidiary called Sigma Chain, basically kind of buying and selling the same security to make it seem like there's more liquidity and activity going on the platform for various reasons. You'd want to do that. And then the other thing that they did was kind of regulatory arbitrage. They created this, what they called the Tai Chi entity, BAM trading, that established Binance US. And the point of this was to pretend that they were going to kind of separate out Binance from its US arm, but the the allegations, at least, are that CZ, the CEO, kind of kept this really tight grip on Binance US and was profiting from it. So that's kind of what really jumped out at me about the suit. But obviously, there's so much more to talk about. I think maybe Adam, if you'd like to add anything from a kind of from your market's perspective, maybe.
Yeah, I think you covered it kind of well for regulation and kind of main like the important stuff. But from market side of things, I guess prices kind of dipped on the news. Initially, when the Binance suit was announced, there was less of an impact, I guess, when the enforcement action against Coinbase was announced. But I'm not quite sure about why that was. If is smaller user base, or I mean, if the market already absorbed most of the bad news. But maybe some of the researchers can tell us a bit more about that, like Nina and Clara. But I guess in the time since, volatility picked up because I know markets volumes in May fell to like 3-year lows since lowest point since May 2019. Volatility spiked and volumes were up a little bit, but with inflation and the Fed yesterday out of the way, there doesn't look like there's much kind of many more catalysts for markets on the horizon, I guess, until the 26th of July. Next Fed meeting, but they've signaled 2 more hikes before the end of the year, so quite hawkish.
Yeah, I think it's also, obviously I didn't talk about Coinbase here, but that was also in a pretty crazy week. It just kind of dropped the next day after Binance, and it looked, if you kind of open it, it just looks like a bit of a cut and paste, but they're extremely different situations. Binance was kind of, if the allegations are accurate, it's kind of almost like nakedly criminal or nakedly fraudulent, while Coinbase will, that's just very different. That's more about a what's the word? The interpretation of the law. It's like, do you agree with Gensler? Everything is a security. Do you agree with Coinbase that they've kind of been really fairly untreated and really unfairly treated, and they've kind of done everything that they could to be compliant. So yeah, I think that was what we sort of saw last week.
Yeah, I agree. I think there's a clear difference between Coinbase and Binance. I think Coinbase are just listing supposedly unregistered securities, so it's a completely different kettle of fish with Binance. But in terms of similarity with Binance and FTX, in terms of code.
I'm sorry, James, I'm gonna cut in here. James, I hope you hear me, but your audio is really cutting in and out. Maybe move to part of the building where you have better connection. I hope you hear me. Okay, nothing more from James until now. I hope we get James back in a second. D, I see you also unmuted. What would you like to share?
Yeah. Can everyone hear me okay?
Loud and clear.
All right, perfect. Yeah, I was just going to kind of, I guess, add a little color to, I guess, the Coinbase and Binance lawsuits. So, yeah, I think it's obvious that these are 2 different categories of lawsuits that are going against Binance and Coinbase. One is just saying, like, this is the market stance that the SEC has as a regulatory body of the entire crypto asset space. And the other one's literally saying not only are you selling unregistered securities, you are potentially laundering money, leveraging customer funds, commingling customer funds to do illegal activities with it. I think the major question now is, was that the Binance of old, or is that still how Binance operates today? Is Binance still potentially doing nefarious things with customer funds? Is this a repeat of FTX 2.0? It looks like a lot of the information that was in the lawsuit for Binance was predominantly focused on the era of 2018, 2019, when, if everyone remembers, that's really like when Binance was, a 2-3-year-old company. They obviously gathered a substantial amount of market share in that period, but there's also a chance that Binance of today is not necessarily what they were back then when they were potentially doing those illegal activities. Again, all of these are just hearsay for now. We don't necessarily know if any of this is true. They're innocent until proven guilty. But I think there's a completely different, types of lawsuits that are going on today. But unfortunately, the problem is that the entire market's finding out in real time what assets SEC deems are securities. So there was a large overlap. Like I forgot who said it. I think it was Joanna said that the lawsuits were relatively copy and pasted in terms of the SEC stance on what assets they deem as securities. But there was also, like, really interestingly, like, there were things that were missing. Like, one asset that I personally cover a lot in Blockworks is Atom, one of the largest asset in the Cosmos ecosystem. Binance's the Binance US lawsuit, SEC said that Atom is a security, but for Coinbase, it said it wasn't. It didn't explicitly say that it wasn't, but it wasn't explicitly called out as an unregistered security. And we're not exactly sure what that means. But what I think is interesting is that because the SEC in these lawsuits are saying, like, these listed assets are securities, we saw a lot of second order effects for other companies that do have crypto as an offering. So like Robinhood, right? Because the SEC registered Sol or claimed that Solana and Matic and I believe Cardano are unregistered securities. We saw Robinhood say that they pretty much told their entire customer base, we're going to stop selling these assets because of the unregulatory certainty around these assets, and you essentially need to go self-custody them yourself, or if you don't self-custody by such and such date, we're going to force liquidate your assets and then convert them into cash on your Robinhood account. And I think that was when you really saw the large precipitous fall in the market this past weekend, because I believe that Robinhood announced this on Friday, and I think people looked at Robinhood's balance sheet and saw that they had like $1.4 billion in assets that were altcoins. That might not be the exact number, but it was a large number regardless. And the market kind of realized that, oh shit, there could potentially be a lot of selling pressure for our altcoins. You saw Bitcoin and Ethereum take like a 2 to 3% drop, but you saw the likes of Matic, Cardano, Solana, near a lot of the assets the SEC explicitly mentioned are unregistered securities have a 20% plus decline, and it was heading into a low liquidity event over the weekend. And I think the market's kind of anticipating that there's a chance that you might see centralized exchanges, at least in the United States, and other fintech companies that have these assets on there as a service offering, that they might ultimately have to make the same decision, which is to completely delist it, which I don't think that's the case. I think ultimately the companies that have already made this decision to delist have already done so. We already know Coinbase said that they're not going to stop their staking product. We already know that Coinbase said that they're not going to delist any of their assets. So I think at this point, ultimately the market is all about the marginal buyer and marginal seller. And I feel like, at least in the United States, if you haven't sold yet, I'm not really sure what will cause you to sell forward looking.
Right. If you've been holding on to now, then you're probably a pretty convicted crypto holder or user. Right. That also makes sense with regards to last weekend when everything was in the red. That explains why. So all these securities that were listed in by the SEC basically are tainted right now. That's a way to put it. What does the rest think? Is crypto deeply in trouble here? Will it stay contained to just US markets, or will it expand further into the global crypto markets? Clara, I see you unmuting.
Yeah, I mean, so we've been talking a lot about Binance and sort of the nefarious activity there, but the reality is that Coinbase has a lot more to lose than Binance does in this situation. 80% of Coinbase's business right now is in the United States. And so the fact that the lawsuit is essentially putting Coinbase's entire business model at risk. They have no choice but to fight it till the death. Whereas Binance still has Binance Global. Binance US is a very, very small, tiny fraction of Binance Global's overall trade volume, and just overall influence over the crypto ecosystem. In fact, Binance US never really penetrated US markets at all. Today, I mean, in the week before the lawsuit came out, I think it had like less than 10% of total US market share. And this market share was extremely volatile over the years, probably because there were some really weird things happening, like always a new zero fee trading promotion. There was now allegations of the wash trading. And so it's, I guess, can be assumed at this point that Americans weren't really using Binance US. They would almost always just go for Coinbase or Kraken. And so Binance, I think, can make it through globally because I guess they're everywhere. Whereas it's really going to be tough for Coinbase in the near future to sort of maintain strong business.
Yeah, what I will say is I agree with everything Clara said. One thing that I think there's a whole brand recognition that Binance has, and CZ. I kind of liken like CZ and Binance to like Tesla and Elon Musk. Like they're attached at the hip. CZ has such like a fervent followership, and even on the backs of the Binance announcement of them potentially commingling funds and doing all these nefarious activities, you saw about like $1.4 billion in outflows over the past week from Binance. I'm getting this information from DeFi Llama, and I think they have arguably like the best centralized exchange transparency dashboard in the business. But that's like 3% of their AUM. It's really not, it's like a blip on the radar. You would think that if Binance users were really afraid of them losing their funds, they'd be withdrawing en masse. And hopefully Binance is actually not lending out their customer funds like FTX was, and should be able to wind down accordingly. But the reason why I was kind of going back to like this whole Elon Musk Tesla argument is because if the DOJ does come down on Binance, and specifically CZ, and says he is indicted in this in the potential like lawsuit, and they need him to step down from being the CEO of Binance. And I think you saw some news on Bloomberg last week that Binance is already potentially like thinking about the heir successor to CZ. I think he's I forget his name off the top of my head, but he's like an ex regulatory head in Singapore and also in Dubai, or yeah, I think Dubai. And he's potentially going to be like the new CEO and chairman for Binance. I do think that the confidence in Binance as an entity, once CZ steps down, is actually going to be like the telltale sign for how sticky their user base is. And I personally think you're actually going to see a lot of users actually leave Binance and go to like the OKXs and Bybits of the world, because during these outflows for Binance, you saw a lot of inflows into those exchanges. And it's kind of like playing whack-a-mole at this point. Like, what exchange is like, I guess, the safe haven, which today there really is none internationally. And obviously Binance is going to be the number one for the foreseeable future. But I think if CZ is forced to step down, that's going to be an interesting event to see like how good their brand is.
Right. Any thoughts as to why those exchanges specifically seem like safe havens to those users that cause the outflows?
I think they generally have good products. They have liquid markets. As of today, knock on wood, they haven't been fined or been caught red-handed doing anything nefarious. I honestly think it's just like, where else are you going to go? You couldn't go on chain. Not a lot of customers, not a lot of crypto users feel comfortable self-custodying their assets, but they also want access to leverage. They want access to a bunch of long-tail assets, and those are the two largest perpetual futures centralized exchanges that they can get access to those types of products. And Binance has like, I don't know, I'm sure Clara can give us a more precise answer, but they have probably 90% plus market share. Binance does in all crypto market share in terms of trade volume. And I mean, I think regardless if Binance goes down or not, I think it's a good thing that we're seeing more market share in these other venues, just because, especially as an industry that prides itself on decentralization, it's not a good thing that, regardless if they're a good actor or not, it's not a good thing that one entity has 90% market dominance in an industry like this.
Just to clarify, they have about, I think the last time we checked, like earlier this week, was about 65% market share, which is good.
Oh, wow.
I guess one exchange at 90% market share would not be great for crypto right now.
Is that for futures plus spot, or is that just futures?
This is just spot, and actually derivatives, Binance, OKEx and Huobi are actually sort of edging in on Binance right now. So Binance is a little less dominant right now.
Okay, that's good.
Well, collaborating with the market figures a little bit. That's what we do space for. Okay, small summary so far. Binance, Coinbase, they're both in trouble. Allegations against Binance are a lot more serious, but on the other hand, Coinbase's business is totally dependent on what happens in the US market, and that's where the lawsuit is taking place. So if they fall all the way. Whereas Binance has a way out because it has global markets, and then as Dee pointed out, they the way I would summarize it is kind of like CZ might turn out to be the fall guy. So, he turns out to be the scapegoat. Somebody else can step in and Binance can kind of continue operations. James, I'm glad you rejoined us. Hopefully you have a better connection this time. I do want to give you the opportunity to respond to the other speakers or what you originally wanted to share with us.
Yeah, I went out, so I have missed parts of the conversation. No, but I just wanted to allude back to the similarities between Binance and FTX in terms of commingling funds. Like this time last year, FTX pretty much had the most amount of coins on exchanges. And then literally 4 or 5 months later, we all know what happened. So it's weird how correlations work. So yeah, there's even on the trading, we can see that BNB supposedly is being artificially lifted as well. So it's not great. But yeah, it's hard to put a point on it without being suggestive. So it's hard to have actual data, which is what we're in for. So it's hard to actually say definitive answers.
Sure, sure. Okay, we take a different approach and try to look at things on that. But in the day, none of us have a crystal ball. We're not trying to make any prediction. We're just like, what happens next? We make educated guesses about what could potentially go down next, or maybe what in the past you usually see, how you see situations unravel
Yeah,
in
well,
similar scenarios, right?
yeah, well, similar bear market stories and scenarios. The news will tank the market, and then in obviously bull markets it will go the other way. But like for example, tether depegging usually is a market bottom, relatively. That's with like perpetual funding rate going negative for Bitcoin as well. So with 2 SEC lawsuits, BlackRock coming out just after the lawsuits, what would happen if they actually came out before the lawsuits? So timing is everything. So yeah, not surprised, but I do see more and more similarities between Binance and FTX, to be honest.
Yes, which is also very ironic, of course, because it was CZ who originally called out FTX and Sam Bankman-Fried. And now we see, let's call it, what do you call it? A repeat of, of a scenario, of a certain scenario. I have two questions here. We could go two ways. I'll leave it up to you guys, I guess. Like, okay, so on one hand, I'm wondering what's the what are the chances of Coinbase? Because it seems that they are very well prepared. It seems like they were waiting for the scenario to go down a while. They've been like gathering like legal resources, getting all their facts straight. So I'm very curious about what you guys think about their chances in court. And I'm also, but maybe we can save that a little bit for later. Like, I'm very curious about how the unpegging of Tether ties into all of this. Anyone cares to respond to either of these two questions?
I can take the first question, Helix. I hope you can hear me well. I think Coinbase, of course, my whatever I'm going to say only represents my opinion and no financial advice. But I think that Coinbase is pretty much a big key player, and I really admire their efforts to reach regulatory clarity. Obviously, they have a stake in that. I think they are the way they're handling it is sort of like buying time until the bull case is when Congress steps in with a bill that would standardize crypto regulation and clear the noise in the FUD. So I think this is that's how I see Coinbase's position. I can't say if this is gonna pay off or not, but I feel it's gonna I think this whole thing, this whole ordeal, it's the market reaction is very panicky, but I think this will all pay out well in terms of regulatory clarity and like more conversations about how crypto should be treated in the eyes of the law. Yeah, and I think we just need to closely monitor the situation, and yeah, that's pretty much it.
Yeah, I would agree that the fact that next year is an election year is a complicating factor. And when you're trying to understand what the future might hold, I completely agree with that point. I think I quite like reading the tea leaves with kind of litigation, and just from that perspective, I think it's very obvious that Coinbase won't settle. The SEC always likes settling because it just it gets you kind of a win. I'm not supposed to say that because settling is not supposed to be seen as a win, but it does mean that you don't have to go to the uncertainty of a trial. I don't think Coinbase will settle here though, because if they do, that's the end of their business probably. So the question then becomes: do they go to a jury trial or a bench trial, which is just when the judge decides without it going to a sort of public jury. The SEC has asked for a jury trial. That doesn't necessarily mean they want one. It's just what you do to make sure that you can get one if that's what you want at some point. So it could go either way. Mostly litigants, both sides, like having a bench trial for various reasons that are probably too boring to go into. But what Coinbase has had, and I think Lena kind of pointed to this, they've always had this very sort of strong, I want to use the word marketing, but it comes across as a bit cynical. I don't mean it like that. They've always had this very strong messaging around their mission. They see themselves as a kind of champion for the industry. They're kind of going into the battle with the SEC, not just to preserve their business and their own interests, but to create case law that will provide clarity around how digital assets are treated under securities laws. And that kind of really strong messaging tends to be very easily communicated to a jury. So they might want to go to that kind of situation just because you get that kind of emotional and moral high ground that plays well with a jury. But to bring it back to the original point, this is probably all moot because it's 2024 next year. So it's really hard to tell, but I think it'll be really interesting to see how that plays out.
Yeah, I think the thing to watch out for over the next 6 to 12 months, and I doubt Congress never moves that fast, but is the recent McHenry-Thompson market structure bill that was just introduced, I want to say either last week or the week prior. Obviously we're seeing a lot of international regulatory bodies start to kind of create their own frameworks around digital assets. So you saw MiCA just officially went into the EU journal. And my understanding of MiCA, and hopefully somebody correct me if I'm wrong here, is that creates like a separate regulatory body that oversees digital assets. whereas I think the McHenry-Thompson bill pretty much tries to figure out where digital assets sit in the securities or commodities discussion, depending on a variable amount of factors, but essentially it creates like a pathway saying like if you could very well be a security today, doesn't necessarily mean as a digital asset you are a security tomorrow if you meet certain criteria to become a commodity and you're sufficiently decentralized. And I think I'm not a legal expert, but a lot of legal experts I follow on crypto Twitter that are reading these types of case laws and reading these types of bills day in and day out, they sound cautiously optimistic about at least the initial draft of the McHenry-Thompson bill. It sounds like it kind of gives small wins to the SEC, gives small wins to the CFTC, and ultimately creates like good consumer protections while also allowing digital assets and crypto in general to flourish in America in like this kind of safe sandbox. I don't think crypto is probably not at the top of the priority list for Congress and the U.S. government as a whole, but I do think that the United States is going to get it right in crypto, regards to crypto, probably sometime next year with it being an election year. Obviously, again, you're going to see a lot of other priorities make its way to Congress with it being an election year because they got to prove to American people that they're doing things that actually matter to them. And the majority of people really don't think crypto is at the forefront of their minds. But I do think you're going to see some type of positive regulation movement sooner rather than later, especially, it was predominantly on the Republican side saying that we needed a positive framework. But you did start to see some House Democrats, and predominantly, I think, Richie Torres out of New York, who's a Dem on the House floor. He wrote this relatively scathing op-ed, I think, about, I guess, how the SEC under Gensler's watch has kind of overstepped the regulatory purview, and ultimately saying that we do need some type of sensible framework in the United States for digital assets. So I think you're starting to see momentum. And I think, especially recently with the SEC telling the court related to Coinbase's lawsuit against the SEC, saying that they were supposed to respond with some type of, I guess, basic understanding of like what assets are securities and which aren't. And the SEC pretty much responded saying, we're not going to tell you, and pretty much told the courts you have to trust us. And Coinbase really has no leg to stand on, pretty much demanding a black and white, I guess, rule book as to what assets are deemed securities and what aren't. But I think the SEC is kind of going down this like belligerent path where they're not listening to anyone. They're obviously doing regulation by enforcement. And this is really not a way to, I guess, treat this growing industry. So again, I'm cautiously optimistic you're going to see some good movement in the next 6 to 12 months. But to everyone's point, I think being an election year next year does kind of muddy the waters a little bit.
I guess I can jump in there. I wouldn't speak much to the policy and regulation side, but just kind of like from my own point of view, I find it hard to imagine that crypto would be that much of a voter issue in the States. So I think there's probably bigger things, and I guess the kind of argument that the SEC is being quite belligerent with how it's approaching this. I mean, they've said that most things are securities and that there's a path to registration. We don't know how those conversations have gone, but surely I think from the Coinbase point of view, they've registered. They've said these 13 tokens are securities, and they've registered. Coinbase offers near like 200 different cryptos or so. I mean, if you're not sure that how to register and you don't know what is or isn't a security, you don't have to go on and offer 200 of them. So there's also this that it kind of makes me wonder. But that's all I really have to offer on that. Not much else on the policy side.
I think which is is that we just we don't want to be unregulated, but we kind of want to know what's up. And the SEC is not given into that, which is very weird to a lot of people. Joanna, I saw you unmute for a second.
Yeah, I didn't want to jump in case anyone else wanted to speak, but I did want to kind of underline the point made, which is I used to speak to a lot of ATS, which is a kind of small mini exchange that operates in the US, but TradFi, not crypto. And they had to go through this registration process, and they complained about how hard it was all the time. And once you've gone through the registration process and you're disclosing, that's even worse. It's extremely expensive. It's very burdensome. A disclosure doesn't sound like a big deal, but it is. Just logistically, you need an entire person to do it every year. Every month, sorry, depending on the kind of cadence of your reporting. But one thing that no one in TradFi ever does is they don't offer the product and then wait for approval. They wait for the approval first, and then they start offering the product. So I think that point that Coinbase makes, you can poke holes in it from their perspective. And yeah, I thought that was a good point made by the previous speaker.
Yeah, I think the problem is, though, that, and maybe somebody correct me if I'm wrong, is I think Coinbase actually has requested a license to become an exchange that offers securities. Digital assets are not. And the SEC has refused to approve that license for over a year. And if they won't approve, like, let's just make the assumption that everything's a security. If everything in the crypto is a security, Coinbase has a stale license that they're waiting to get approved from the SEC to actually offer crypto securities, because they've even said themselves, some assets are securities, some aren't. And obviously that's Coinbase's like specific view. But if the SEC won't even let Coinbase become a registered securities exchange, then but at the same time they're claiming everything in crypto is a security, like, wouldn't the SEC, if they were acting in good faith, wouldn't they at least let Coinbase become a registered securities exchange, and then at the very least say, like, all right, well, now everything's a crypto security. Obviously, each individual product team is going to have to register with the SEC and provide the proper disclosures. But if I feel like it's kind of like a chicken and egg problem. Like, if Coinbase is offering unregistered securities, that's one thing. But if Coinbase at the same time is at least looking for a path to become a registered security exchange, and the SEC has not given them that opportunity, then I feel like then the SEC is really not operating in good faith at the same time.
Yeah, I think we're just encapsulating the debate that's going to play out in the courts. I think this is exactly what it'll come down to. Maybe it's dangerous to make this kind of prediction, but you can see that's these are the battle lines that are being drawn for sure. Certainly, also a great point.
Yeah, I guess none of us are making predictions, but it is definitely interesting to, let's call it, going through the possible scenarios, right? One other thing I would like to touch on, moving towards a bit of the end of this space, is much more recent event. By that, I mean the Tether depeg. It's always a bit alarming when a stablecoin starts depegging. And I think it was Clara who mentioned that it's also related to the event, the topics we're talking about today. I would like to know how, if that's the case, and also if we should really worry.
To clarify that it's not actually related to the Binance SEC stuff. The Tether depeg seems to have been a coordinated depegging attempt by sort of an unknown entity. Tether actually just a second ago published a press release claiming that today someone tried to depeg Tether on centralized and decentralized markets. So it's unrelated. It just happens to be like part of the news this week. Same with the CRV lending issues, along with the Binance and Coinbase stuff.
Gotcha. Thanks for clearing that up. Okay, I misunderstood. Nonetheless, it seems like crypto is in troubled waters. these last 2 weeks. Lots of things going on. Um, I also understood that Hong Kong is opening up its business to crypto. I believe they have encouraged some banks to start doing business with crypto exchanges, something along those lines. Does anyone here know any more about that? Because I find it curious that right at the time that things are getting more complicated in US, we do hear positive sounds from EU and Asia.
Yeah, I can take that away. Uh, if I understood your question correctly, Helix, yeah, there has been moving east. Hong Kong is opening up to crypto, and actually one of the regulators, went on Twitter after the Coinbase lawsuit, and he explicitly said invited Coinbase and other global digital asset providers to come to Hong Kong and leverage the growing appetite for crypto. So this is generally good news for the industry. It's good news for the greater cause of crypto. The reason why I personally worked in crypto is or believe in crypto is I believe in the narrative of non-state money. I don't think countries should own our money, and that is adoption anywhere is good for crypto. So especially Hong Kong, as a hub that closely works with of course, the UK, and especially now that we're seeing that they are attracting foreign investments through crypto and through tokenized security, especially with we just saw a few days ago that they just collaborated with UBS to do so with Bank of China Investment Bank. So and we've also seen Singapore give a license to Circle for also cross-border operations. So this is all good news, and this all indicates that the SEC lawsuit is just one straw, and I can't remember the proverb, but you know what I mean. So I'm not downplaying the SEC's lawsuits. Of course, it's a nightmare. But what I'm trying to say is just to focus on the bigger picture and on the fundamentals. And yeah, good vibes only.
I think that's a great message because yeah, the markets are down. Everybody, there's definitely like this sense of doom and pessimism going on right now. You see it a lot on crypto Twitter, like the markets are really bad. So I think that's a great message to focus on the larger picture, on the bigger picture here. Um, and also to keep in mind the whole reason a lot of us probably got interested in crypto in the first place, like this potential for non-state money, for example, really having ownership over your finances. It's important to remember these things in times like these, I think. Um, Before we close it out, I think my last question would be to everyone here. Um, just like in general, like in summary, I guess, how do you think it will play out? Again, obviously we can't make predictions, but are you generally positive or are you a bit worried?
I'm I'm positive. I mean, I'm based in the United States. Obviously, I'm not happy with how things have unfolded here. But I think at the same time, the United States is battening down on crypto. You're seeing, like we've already discussed, we're seeing international expansion. You're seeing, Western and Middle Eastern nations and obviously Hong Kong as well, kind of embrace crypto with open arms. I ultimately think the United States is going to get it right, and I think that this international competition for crypto talent is, if anything, going to light a fire under the United States government's ass to try to, become and maintain competition and be the leader in this space, like they have historically in other areas, predominantly, Web2 tech. Obviously, it's not a great time to be in crypto, but I also think at the same time, it's probably if you can survive this, I also think it's arguably the best time to be in crypto. It's a double-edged sword. But I think at the end of the day, like for most of us that are in this industry, we believe in decentralized ownership. We believe in open financial systems. We think that it's inevitable that you should be able to track the maybe financials of a business or a decentralized entity 24/7, 365. The future is not quarterly reported in quarterly financial statements. Like we have information at the touch of our fingertips, and crypto ultimately, I think, is the next iteration of this. And I don't think the Pandora's box is already opened in terms of crypto and open financial systems. I think ultimately the world is going to embrace it, and hopefully the United States is part of that story. But if not, I look forward to seeing innovation and developments in other nations as well.
Love it. Positive spirit. Clara, your closing sentiment?
Yeah, I mean, it's definitely like dark times in the US right now for crypto, but I think there's definitely a lot of opportunity in the EU and APAC. So I would say my positive outlook is looking at other regions and a less US focused crypto environment.
Yeah, I'd just to piggyback on what Claire said, I'd agree. I think we can start looking beyond the US maybe, and it should be kind of transcend nations anyway. So if crypto is going to be truly kind of uptake with crypto, it should be global and not just singular to the focus on the US and a single point of failure.
Great points. Let's keep a wide perspective. Joanna?
Yeah, I think this might not go down well with everyone, but I think if crypto wants kind of big inflows, it's going to have to get institutional buy-in. So, big banks, for instance, that's not necessarily a positive for everybody, agreed. But I think that is going to be something of the trajectory, at least for some of the industry. I think there are banks and big asset managers and so on looking at like DeFi tech, for instance. And I think what you're going to see is the merging of the two worlds, at least to a degree. And what we're going through right now is almost like the sort of teething problems of a fairly young industry that will get more and more what's the word? Kind of authorized, I guess, and kind of absorbed into normal life by a wider investing public as it gets adopted more and more in institutions. I know, like, as I say, I think that's not something that everyone wants to hear, but I think that is a trajectory, and it might just end up being the thing that saves it in some ways. So I guess that's positive, but I guess for some people maybe not.
Like everybody ultimately wants to see a wider adoption of our industry. So at least that is something we can all get behind. Lena, your closing sentiment? I'm not sure if Lena is still with us, or at least she's not unmuted. If you still want to share your closing sentiment, please speak up now. Otherwise, I'll have to move on with closing out the space. So, yeah, very interesting. I think we learned a lot today. yeah, I'm not gonna summarize everything, obviously. Clara, did you want to share something?
Oh,
You're
no,
still
sorry.
on it. All good, all good. Yeah, so I want to thank everyone for being here, the audience, also the speakers. Very interesting talk again. Regulation can sometimes be a bit dry, but definitely the last 2 weeks are, proof of the contrary, I think. Lots of fireworks. It's shaking the markets quite a bit. It'll be interesting times, very important time for, especially for Coinbase, but also for Binance, and definitely for the industry as a whole. Yeah, let's just stay up to date on the developments. And before we close it out, I want to give everyone, all the speakers, by that I mean, opportunity to tell the audience where to find their work, where best to follow them, maybe sign up to newsletters that they work on, stuff like that. So with that, please take it away. Clara, maybe feel free to start.
You can go to kaiko.com and then click research, and you will find all of our newsletters there.
I have some trouble connecting or like hearing Helix right now, like right before, and also Joanna, I didn't hear you speak at all. Just saying. So I'm assuming now that we're just saying where you can find our publications. So I feel like a deaf person now. So 21shares.com /insights. I hope I'm not speaking over anyone. Yeah, the internet is weird. Okay.
I'll go next. Yeah, you can find, obviously you can follow me, you can follow Blockworks Research on Twitter, also blockworksresearch.com. So we do institutional grade research, writing about the long tail assets, as well as more traditional crypto assets like Bitcoin and Ethereum. Obviously, you can also go on blockworks.co to look at our journalist side of the business. Just thanks for having all of us.
Yeah, I can jump in. I guess you can follow John and I at DL News info on Twitter or by the website. Joanna has a newsletter, I believe, coming up on regulations. She can probably tell you a little bit more about that, but definitely one to subscribe to when it gets going.
Yeah, that is forthcoming. It's going to be called The Guidance. We haven't launched it yet, so watch this space. We are dlnews.com. We have a very talented team. It's not just us. There's a big DeFi team as well, and a couple other correspondents. And we do great stories, I think. So yeah, give us a follow and check us out. And thank you for having us again.
Thank you. Thank you to the speakers for being here, for sharing their insights, for educating the space, and making an insightful and engaging conversation and discussion today. Next week, we'll be back with our next session. We're doing these weekly. So if you like these, you can follow me or you can follow MetricsDAO. I'll be sharing stories from Web3 analytics landscape and the players in it. So yeah, follow me for that, and you can follow MetricsDAO for cool Web3 analytics challenges, content, and education. So thank you once again to speakers and to the audience for being here. See you.